President Biden announces the ban of buying oil from Russia over Putin's Ukraine invasion. Oil surges higher to $124 per barrel. Oil stocks are also surging higher, with Chevron stock leading the charge with a 5% jump in price in today's trading session to close up over $8 per share and finish at $170 per share. Is this the start of something big for Chevron? Might they continue to surge with the unstoppable rise of oil prices? Or has Chevron peaked and holding these lofty highs on something as precarious as a slippery barrel of oil? Welcome to Stock Market Fever. Today is Wednesday, March 8th, and today we're going to see what's the deal with Chevron. Where has it been? Where is it going? First off, if you are prescient enough to have bought Chevron 1 year ago, you would be up over $61 per share based on yesterday's closing price of $170 per share. Even as recent as January 3rd, Chevron shares, ticker symbol CVX, were trading at a paltry $117. But then, Chevron started climbing at a slow and steady pace, trading in a range between $130 to $140 between the end of January and pre-Putin invasion of Ukraine. However, all that was to change as Chevron started heading steeply up, climbing rapidly with the tensions of war in Ukraine and the rising price of oil, and shooting up yesterday based on the oil price surge and possibilities of oil rising higher with a ban on Russian oil. But where does it go from here? Has it shot up too fast and too high? Based on its close yesterday of $170, it seems to be trading at a not too frothy 20 times price earnings, and with income expected to increase with the fortunes of oil, it would seem reasonable to believe that its PE ratio could come down based on yesterday's close. But the fortunes of war are fickle, and an unexpected truce between Russia and Ukraine might bring oil prices down. But how fast and how far? And might Democrats in Washington impose a new windfall profit tax, as they have done against oil companies under the Carter administration of 1980, only to be repealed under President Reagan in 1988? The idea might not be that far-fetched. Just yesterday, Senator Elizabeth Warren tweeted, quote, "Big oil companies are making higher profits off Putin's war in Ukraine, while families pay higher prices at the pump. It's time for billionaire corporations to pay their fair share and invest in clean energy." And how do stock analysts rate Chevron's prospects going forward? On March 2nd, with Chevron shares closing at $154, Morningstar rated Chevron a hold. And as of March 4th, Schwab Equity rated Chevron stock with a solid B, outperform rating, with guidance to buy Chevron. CFRA analyst Stuart Glickman on March 7th rated Chevron with a hold rating, giving a target price of $163, which the shares shattered today by the close. With the shocking news of Biden's ban on oil purchases from Russia and the upward surge of oil, will these analysts revise their ratings? Will the price of oil and Chevron's rising fortunes make it a prime target for Senator Elizabeth Warren and other haters of big oil? Might an unexpected truce break out in Ukraine, reining in the surging oil prices anytime soon? And what do you think? Where do you think Chevron shares are headed? Please leave your comments below and be sure to like and subscribe for future stock market alerts right here at Stock Market Fever.